And welcome back to KTN Morning Express. My name is Michael Karanja. Now, this is a key trend taking place in Kenya, and that has to do with leasing. And over the last few years, the national government has actually turned to leasing in a way of more or less financing itself and actually getting assets down to the where they're required. And just to help us get around what leasing is all about, I'm now joined by Lucy Karuga, who's a manager at NIC Leasing LLP. So Lucy, when we just start and look at leasing on a general landscape, what is leasing? What does leasing entail in general?
Okay. Leasing basically entails where a customer doesn't want to own an asset, but they want to use it for a periodic period of time. So basically what leasing does, it gives the customer an opportunity to take an asset, use it for a period of time, and then they make a periodic payment. That's what leasing actually does.
Yeah. But just looking at that, obviously gaining traction a lot in Kenya. We've seen leasing more or less on land, where we had long-term leases. We've seen most recently leasing when it comes to property, but now we're moving to leasing where it actually moves to other assets. We have machinery, we have cars, we have all these things. When you look at the general landscape of leasing in Kenya, how does this excite you as a bank and someone that's actually involved in leasing?
Okay. If I were to look at leasing in the context of which you're looking at the land and buildings, that is typically what was being done. But the move that where the market has shifted now is what we call the operating leases. Now, for the operating leases, we are targeting customers who want to acquire depreciating assets. If you talk about motor vehicles, if you talk about ICT equipment, those are depreciating assets. So for us as a bank, why it's an exciting time for us is because our heritage is in asset finance. Since 1959, we started as a credit installment institution. So leasing is in line actually with our strategy, our long-term strategy in terms of innovation, in terms of our product offering, because what we realize is for a very long time, we've been financing customers to acquire assets, but there's this new segment of emerging customers who do not want to own these assets, but they want to use the assets to generate income. So for us, we've seen an opportunity in terms of a market shift where customers have actually realized that income is not it's actually not derived by owning the assets, but actually by using the assets. So that's why we've actually entered into this space.
Just looking at that, obviously, when you look at leasing, who's going to benefit? Is it an established company? Is it companies that are trying to start out? Or is it beneficial to all these types of companies?
I would say leasing is beneficial to all these types of companies. Why? Because there are various benefits that leases offer. One of it, just if we were to look at it from an overall angle, from a cash management point of view, who needs cash management? Who is having a constrained budget? We have both startups, we also have well-established companies, because as much as an organization may have a budget, it may be competing with other needs that the organization have. So what happens is leasing cuts across the board. Other benefits that it gives is tax. For as long as you're an organization that has taxable income, it means leasing is going to give you a solution. So even when it comes to government, leasing works very well because part of the constraints that the counties are facing is they have so many projects to undertake, but they have limited budgets. So what leasing is doing is basically enabling these organizations make use of the budgets they have to acquire more assets today rather than in future.
Just look at that, obviously talking about counties, the shift really hasn't gone through that way yet. It seems like the national government is the one who's pushing that agenda. But just looking at counties, should this actually be a tenor that they are focusing on more importantly?
Yes, and we thank the president in terms of the initiative that is actually carried out, because when he was the finance minister, he is the one who brought in the agenda for leasing. So in the last 2 financial years, we've seen a huge allocation from government. Last year alone, we saw an allocation of 6.7 billion towards leasing of assets. So because of that, what has happened is the government is able to use the limited budget to acquire more resources. So the same challenge should be there in the counties. In fact, what we will advocate for is to have a government policy that also pushes the county governments to advocate for leasing in order to acquire any movable assets that they need for their developmental projects.
What are the basic tenets of leasing? So I have an item here, but for how long should I have this item for it to make economic sense for both me and the person who's leasing this to?
Okay. When it comes to the tenets of leasing, what we look at is what kind of assets do you want to lease, and then we look at what is the shelf life of this asset. Because for you to use this asset, you have to use it at its best in terms of its economic useful life. So for us, what we look at is how long. I'll give a good example. When it comes to ICT equipment, most of it by 3 years it's become obsolete. It's become obsolete because probably there's a newer technology.
Yeah.
So now because of that, those are some of the things that guide us in terms of how long we can actually be able to offer the lease program.
And who does the assessment? Is it the lessor? Is the person coming to the market? Who does it exactly so that you don't get yourself into a leasing agreement that overrides the natural benefits that you might have made financially?
Okay. As the lessor, because NIC Leasing LLP is actually a lessor, what we do is basically we assess and be able to see the economic viability. So what we do is we liaise with suppliers or other experts who are able to guide us in terms of how long we will be able to offer a lease, and also we guide the customers accordingly. For example, if you want to lease a motor vehicle, as opposed to you leasing it 8 years, what we'll tell you, take a 4-year or a 5-year lease, because we believe during that time you'll get the full use of that asset. Because now when it goes beyond that, now you start dealing with things like maintenance, which of course may bring the operating costs high. So for us, that's we as a lessor, we are the ones who provide the guidance. Yes.
And just looking at, obviously you're new into this game of, or not that new since you're doing asset financing before, but just looking at that, what are some of the what are some of the sectors that you see people mostly going into these leasing agreements for? Is it for vehicles? Is it for computers? Or is it generally for everything and anything under the sun?
Okay. As much as NIC Leasing is relatively new, we've been funding operating leases for independent leasing companies from 2008. So because of that, what we've seen is generally there's a diverse market in terms of customers who want leasing. One of the key segments that has grown through the leasing model, we have the retail sectors. The supermarkets have actually established themselves through their branch networks through using operating leases. We have transporters because they have large fleets, so leasing works very well for them. We have institutions that are heavily reliant on ICT because leasing provides a way where they can keep up to breast with technology. So for us, those are some of the segments that we've been able to cater for. Then we also have the construction segment, because what we've noticed with the construction segment, there's a lot of infrastructure, both in real estate. If you talk about the roads, I mean, the government wants to do the 10,000 kilometer road network. That needs equipment to do that. So for us, that creates a big opportunity in terms of which segments we can serve.
And obviously, if someone is coming to get with you in terms of a partnership for terms of leasing agreements, what are some of the things that you look out for to ensure that you, first of all, you don't burn yourself by financing and actually giving someone something, and that they're able to make those repayments on a steady basis?
Okay. As an organization, what we look at for a customer who wants to take operating leases is we look at their capacity to pay. What we look at is the assets that they take on board. First, will they generate income to them? One. Then two, we look at, do they have a capacity to pay? And we're looking at it both from a historical perspective and also a future perspective, where we are looking at them. If I give you a 3-year lease, will you be in business in 3 years' time to be able to serve that? So part of our evaluation is actually to see that the customer can demonstrate capacity to meet the rentals that we will charge them.
How do we change, as a country, how do we change the mindset rather of ownership versus I don't necessarily need to own this. Someone can take the risk and I'm in a contract with them for 3-4 years and then move on to something new.
Okay. I'll tell you that has been a challenge for us in terms of changing that mentality. But what we've realized is with education and informing people in terms of the benefits that the product has, we've seen a sort of mind shift. Because one of the things you'll realize, the reason why I need a lot of assets in my balance sheet if I'm an organization, because banks have made me feel that I need a big balance sheet in order to get a loan. But here we are telling you, the key thing we are looking at is your cash flow. So one of the things you are saying, if you're able to generate your cash flow through renting an asset as opposed to ownership, then by all means go through that means. In a nutshell, what we always tell customers is, if an asset appreciates, own it. If an asset depreciates, lease it. So for us, that's basically the mantra that we use to guide customers in terms of what to own and what to lease.
I was looking at that in view of, like in developed markets, you find that even cars, someone doesn't necessarily need to own it for him to have a car, but here in Kenya, people just feel like I need to own a car for some strange reason. But how then, my big question is, how then does that shift move from just not focusing on businesses, but also on individuals as well?
I think from individuals, for Kenya, we are not yet there, because one of the key things that we have realized in the leasing industry, we don't have suitable legislation to guide that. Yeah. In other developed markets, like in Nigeria, in South Africa, if I need a car today, I'll walk into the showroom, I pick it, I pay a rental program. But from an individual perspective is once we believe if there's suitable legislation to drive that business, what is going to happen is we will also encourage individuals to move into that space. And as NIC, being one of the innovators in this space, we feel that that's a segment that we will also want to be on the forefront, because we believe it will give much more value than what the customers are currently enjoying by owning depreciating assets.
And why aren't you in that program of actually changing that mindset and actually looking for that legislation?
Okay. I think as an organization, one of the things we've done is, one, we are members of the Leasing Association of Kenya. That's a lobby group that we come together, stakeholders in the leasing industry. So part of what we are trying to do is to lobby also the government to come up with suitable legislation that is going to support the leasing industry. So I believe as that happens, what is going to happen is now we will feel more confident to target individuals. For example, in a hire purchase segment, we target individuals because we have a specific act, the Hire Purchase Act, that guides how we do business. So I believe if suitable legislation is there, it will give us more confidence, because we may perceive the risk less than we are perceiving it today.
Just looking at that, obviously, let's focus back onto the government and this shift towards leasing. And perhaps, obviously, the most recent one was about 38 billion shillings for healthcare. When you look at that kind of shift and where we are going, and just looking at the way that program was structured, about 15 years, do you think the government has it right in terms of where it's supposed to be heading in terms of leasing? Yes,
I believe the government has to have it right. If you look at some of the key things that the government is trying to drive is healthcare. Part of the challenge that they have had, apart from the issue of personnel, is of course infrastructure. Infrastructure, I mean, do we have equipment to treat all these diseases? We've seen the issue of cancer. But what happens is, for the government to equip all these hospitals at one time, they have a limited budget. But through adopting the lease model, what they've done is they've been able to spread their budget and get all the assets today, but having spread them over a long period of time. So what is going to happen is, assuming that budget of 38 billion was there, and maybe they needed to purchase, probably they will have purchased fewer equipment that will not have served the 47 counties. But through adopting a lease model, one of the key things government is doing, not only is it supporting the infrastructure in the health sector, but it's creating more jobs, because if we have all this diagnostic equipment in the hospital, it means more radiologists need to be hired. It means now the suppliers who are bringing in, they need to import. So we are supporting other sectors on the industry, including clearing and forwarding. We're talking about importers. So for us, what we're looking at, the reason why the government has gone there, apart from just supporting the leasing industry, is just from an overall government perspective in terms of the ripple effect it has in the economy. Because if you can imagine the capital formation that will be derived through this program. So I believe the government is actually in the right direction.
And just life cycle, I know I've asked you this before, but just the life cycle of how these things work. How then do you avoid getting yourself into a long-term contract or long-term engagement with a partner that is not mutually beneficial financially?
Okay. What we look at is, initially, in leasing we say we enter into long contracts, which are quote unquote, but part of what we look at is, if let's say you have an asset, you may not necessarily, assuming a motor vehicles, most of us use vehicles between 8 to 10 years. But when we enter into lease programs, we'll not enter into an 8-year lease program. We'll enter initially, let's say, to a 4-year program, and then we will ask you, what do you want to do at the end of the lease? If you still want to use the vehicle, we give you the option of extension. So normally the provisions we have is, we don't offer our leases for the full economic life of the asset. So what we try and do is see, when is the key? When is the best time to get out? So that's how we structure it, so that irrespective of what happens in future, we know that there's a fallback if we were to terminate or to end this contract.
As a lessor, is it in your best interest then, if there's changing technology, to advise the kind of partnerships that you get into, to actually go and acquire different, like let's say what's new, machinery, but there's new machinery that could replace that even before that term of that agreement is completed? Is it in your best interest to keep changing with the time, or does it have to come from the customer side to drive the change?
Okay. It is in our best interest as a lessor, and one of the unique propositions that NIC Leasing has is that we are in the business of asset lifecycle management. What does that mean? We want to ensure that the customer takes up this asset, that they will use it for its best time. So that if, let's say, there's a technological change 2 years after we enter the lease, irrespective of it being a 4-year program, we'll give the customer the flexibility and tell them, there's a new technology which we feel will be more efficient for your business. So we're giving them opportunities to do what we call asset swap, so that return the asset I've given you. I'm giving you a newer technology that will make your business more efficient. So from that point of view, as a lessor, if we are the ones driving that, then for the customers, we are adding more value than where the customer actually comes to us.
Just look, obviously, as an institution, you're out to make some level of money.
Yes.
But when you're looking at that, how then do you mitigate the risk of someone actually paying more for an item than he would have if he just went out and outrightly bought it himself and owned it?
Okay. One of the unique attributes about leasing, and that's why it's called an operating lease, is one, the customer doesn't pay for the full cost of the asset. So that means even if the customer wants to do a comparison, because normally for sophisticated customers, we go to the level of analyzing vis-a-vis a cash decision or vis-a-vis a loan decision against leasing. So what you'll notice is the fact that the customer doesn't pay for the full cost.
Yeah.
When you do an analysis, you'll realize the customer is actually paying lower. Then something else that we always tell customers, if you look at all the benefits we are giving you under the lease program, it's actually much more than if you bought that asset outrightly. So for us, that's how we try and balance it out for the customer.
The reason I ask that is perhaps, the way we get ourselves into banks with interest rates and what.
Yes.
So how then do you price so that you get to benefit from that program and as well as providing a service?
Okay. The unique thing also about operating leases, we don't sell interest rate. What we do is sell rental. The rental basically is a derivative of three different things.
Yeah.
One being the asset cost, which can be which is actually determined by the supplier. So as NIC Leasing, we can go and negotiate the cost from the supplier, or you can actually go and get the price from the supplier. The second thing, of course, because we have to pay the supplier upfront, our money comes at a cost. Because I am paying upfront, there's a cost I put to my money.
Yeah.
Then the third component is what we call the residual value, which is the estimate of that asset at the end of the lease. So if at the end of the lease I assess that my probability of making a return is very low, it means I'll charge a certain component. If I know my probability is making a higher amount, then I will charge a lower rental, because I know if you return this asset to me, I'll make a gain. So for us, the key thing we do for customers is not to try and charge them a high amount during the lease term.
Yeah.
It's try to see how do we give them an optimum rental so that we actually give them an operating lease program, while at the end, as an organization, we safeguard that for this asset, what return can we make at the end once the customer returns the asset.
So at the end of that period, who owns the property? After 4 years, who owns? Is there an agreement where perhaps the bank remains with the asset, or can you then sell it to the customer?
Okay. In the operating lease program, NIC Leasing will be the owner of the asset because we are the lessor. The reason why we don't put it in the contract that a customer can purchase is because a lease, an operating lease gives a customer a tax benefit, meaning the lease rentals they pay is their tax deductible.
Yeah.
So if we put in the agreement that the customer can own, then we'll get into problems with the tax man, because he will say we are using this program to enable customers evade tax. So one of the things we tell customers, if you want to lease, know that the option of ownership cannot be available to you outrightly. So what we do is we tell you, do a renewal. So you'll be able to use the asset for the full economic useful life. So you'll have derived its usefulness completely, so that at the end of, let's say, an 8-year program, then it means you can exit and take new assets and start it all over again. So that's how we manage that.
Future of leasing, where do you see this going?
I believe there's a great future in terms of leasing. One of the things, just from government leasing only, we started with the national government. We've only served 2 sectors of the economy, one being the health sector and the security. If you look at the parastatals we have, they're quite a number. If you look at the 47 counties, that's a huge opportunity in terms of what we can do. And from what we've established in other markets, government has never gone this deep in terms of leasing. Then if just from our own assessment, we've realized that the penetration rate of leasing is about 6% in Kenya. In other developed markets, it's about 38%. So for us, in terms of the future, there's so much that can be done. And then there's an emerging market based on the smaller and medium-sized enterprises. These organizations, part of the constraints they have is, one, they don't have enough collateral to give banks for typical loans, and also from a cash management point of view, they have all these competing needs that the organization has. So because that's a very big segment that is emerging in the Kenyan market, we feel leasing is the way that we can support them in terms of their growth and in terms of meeting their capital requirements. So for us, we are very positive in terms of the growth. I would say, like, when we started about 10 years ago, we probably had 2 leasing companies. Currently, we are less than 10 leasing companies in the country, and we believe in another 3 to 5 years, we expect more players to be there, because the more players there are, the more people appreciate leasing, and the more we are also able to penetrate the market.
And make it competitive as well.
Yes.
All right.
Yes.
Thank you very much. That has been Irene Karuga, manager at NIC Leasing, just telling us about the industry and where she sees it. And hopefully one day it will be able to trickle down to individuals wishing to lease. Now we take a short commercial break, but when we return, we're going to be taking matters EACC, and the person of interest will be the CEO of the EACC talking to Sophia Wanuna. So that should be an interesting discussion, so don't go too far.